Hello everyone, this is Sabina Srestha. Tomorrow my student ID is EMV80829. Today I am going to present our corporate assignment, and as per our assignment we need to uh, we need to we need to select any one company which is listed on the AXS company for our further assignment on the reporting, for the accounting, for the income tax issues. For that I have chosen the Ready Technology Limited. In the introduction, the accounting is generally referred to the collecting information and the transactions regarding on the book, finally reporting the financial statement. And Ready Technology Holding Limited is, as I said earlier, is listed on the AXS Limited. Now limited company registered in the Australia, New South Wales, and especially deals with the student management, uh, apprenticeships management, payroll, HR admin, and work health and safety, employment service, and the behavior science and technology softwares. And the concept of accounting, we're gonna talk about the accounting profit, taxable profit, temporary differences, which is equals to the carrying amount minus the tax base, and the tax temporary differences. For example, like the carrying amount of the assets is the higher than the deductions available in the futures, it leads to the taxable temporary differences. And for the deferred tax assets is the amount which can be carried over the losses in the income statement, and the deferred tax liability is the differences in the income tax payable and the accrued income tax, and the recognitions of the deferred tax assets and the liabilities. And for the further slides is talk about the tax expenses of the Ready Technology Holding Limited is the income tax payable on the current period's taxable income, applicable in the tax interest rates according to the income tax rule. The income tax expenses for the company is in the latest financial statement in the 2009 was minus 1127 in thousand, and for the 2018 was is 654 in thousand. The company has derived that amount is by considering the current tax, deferred tax, by the revising the temporary deferred and all the adjustment recognized for the periods, and there has been increased amount by the adding deferred tax assets and the losses before the income tax expenses for the continuing operation. And on the other side we're going to talk about the tax expenses and the accounting income of the tax company and the reason for the differences. The tax expenses amount and the accounting income of the company multiplied by the tax rate is not the same figures. There is the differences. The accounting income losses amount is minus 2617 in thousand, and for the 2009 it's minus 1667 in thousand. For 2008 18, the tax rate is 30% applicable, which gives the amount of the minus 785 and dollar and 1364 in the year 2019 and 2018 respectively. The acquisition cost, research, and the development bonus provisions, non-deductible expenditures, and the tax consolidations amount has been the adjusted and the calculated income tax expenses, and the making for it is minus to $826 and the 654 for the year 2019 and 2018 respectively. And adjustment recognitions for the prior period becomes is minus 1127 and $654 respectively. And the deferred tax assets and liability reporting, and the reason for it is the deferred tax assets is the assets of the company are is 3,909 and 532 for the year 2009 and 2018 respectively. 19 and 18. And deferred tax assets are considered the liabilities of the company. It includes the allowances for the expected credit losses, the labor capitalizations, contract liabilities, employment benefits and accrued expenses, software borrowing cost, and IPO cost. And there the reason for the reporting this is the deferred tax assets is that the timing of all these transactions are happening of the events in the current period, whereas the tax to be paid in the authorized for is the form of the last financial year. And for example, the employee benefits or the accrued expenses are paid in the year, but the company will be paying the tax for the last financial period. And for the goes as the income tax payable, the current tax assets, and the income tax expenses and payable. The company has recorded 246,000 and $2,579 for the year 2019 and 2018 respectively as the income tax payable in its balance sheet. And the income tax payable is the amount in which the company will be paying the next financial year. The income tax expenses on the income statement is 1127 and minus 654,000 for the year 2019 and 2018 respectively. The income tax and the cash flow statement is minus 4,330 and 1,221,000 for the year 2019 and 18 respectively. The income tax and the cash statement represents the amount of the tax to the authorized for the last financial year in the current year. And the temporary differences and the permanent differences. The temporary differences are the differences which can be revised in the future and are expected to be revised in the futures, and which arises the difference in the financial and the taxation's accounting rules. The permanent differences occurs when the expenses can never be revised in the current or the futures, which can be considered only the one set of the standard in the accounting or the taxation, therefore cannot be revised in any other for the periods. And the treatment of the tax in the company financial statement. The analyzing the company financial statement carefully, so we can come to the understanding about the differences in the various values and the financial statement and that's what it means. And in last, the conclusion, the temporary differences and the differences which can be revised in the futures and are expected to be revised in the futures, which arises and the understanding to the concept that the financial and taxation accounting rules. It is very important to understand that these concepts which are based on the accounting and taxation rules, and being the accounting as accounting is all the recording and the recognitions of the assets and the liabilities and the revenues and expenses makes it more important while calculating paying the government tax to the government authorities. The holding private limited company as the financial statement helps to make all these concepts and the points very clear, that in-depth reasoning with note of the financial statement. Thank you.